And now we move on to the next segment of our bulletin on the table. Over to you, Otto.
Good evening and welcome back to On the Table, where we discuss current issues making the news. Now, as the first month of 2024 come and went, we look forward to months ahead in hopes that the rest of the year will be economically viable, particularly for the general public in tackling the rising cost of living. Now, with us via video call is Dr. Shankaran Nambiar, Head of Research and Senior Research Fellow at the Malaysian Institute of Economic Research, MIER. Dr. Nambiar, welcome to the show.
Thanks a lot. A great pleasure being on the show.
Now, firstly, coming out of 2023, Doctor, what are your thoughts moving forward in 2024?
23 was a bit slow. I think the manufacturing sector didn't perform terribly well. And I think that's not because of any inadequacy on the side of the manufacturing sector itself. I think it's got a lot to do with what was happening globally, coping with external demand, coping with the Russia-Ukraine war, etc. And so our exports, as a consequence, also slowed down. All in all, 2023 was therefore not terribly fantastic. Moving forward into 2024, I would expect that things would improve for the economy. I see that there are probably lots of initiatives. There probably are reforms that are likely to be taken for the year. And there seem to be plans on the fiscal front to bolster our situation. It's probably not going to be absolutely fantastic. We're probably not going to see growth figures of 7% or something of the sort, but definitely I would think it's going to be a big improvement from 23.
You said, Doctor, it's going to be a better improvement as of the previous year. Now, my next question is our ringgit. Now, certainly is trying to hold on given that it fell to its all-time low of 4 ringgit 72 cent to the US dollar last month. Now, your opinion, Doctor, what do you think on this currency this year?
Yes, I mean, the ringgit has not been performing terribly well. I think I don't know, perhaps yesterday, or I don't know how it's open today, but it's probably something like 4.77 to the US dollar. Having said that, I would expect that things probably would improve as we go forward. A lot of what happens to the ringgit depends on a number of things. Depends on how well we are trading. I expect on that side, on the trade side, we probably would be doing much better this year than we did last year. There is the possibility, there are signs that it could improve. I think also foreign direct investment, I see that as probably being brighter this year. But I think an important factor that will induce confidence will be the kind of measures that we are likely to take in strengthening our fiscal space. I think there will be fiscal reforms this year. I mean, a number of them have already been announced. They will be rolled out as the year proceeds. That will strengthen our fiscal position. There were concerns with regard to political uncertainty. I think those have, by and large, been rooted out. So I see 2024 as being a year which will project which will give a lot more confidence, especially to foreign investors. And I think as the year goes forward, we could expect, and as these reforms come in place, I think we'd be able to induce more confidence and therefore see the ringgit strengthening. Also, there are the big infrastructure projects that were announced in Budget 2024. Those will also be kicking in this year, which would be another big factor to push up the ringgit.
Well, let's hope so, Doctor, seeing that we are trying to get back our ringgit into a good standing with the world. And speaking of which, is tagging the ringgit a good idea today? How are we to survive with the basket of currencies out there, particularly regionally? The Singapore dollar, for example.
I think we're quite clear on the kind of factors that affect the ringgit. And I think many of them have been addressed, if not directly, then indirectly. For instance, the whole slew of taxes, the tax reforms that are going to be introduced that would strengthen tax revenue, government revenue, and that will be seen, I'm sure, in very positive light, which would translate into the ringgit strengthening. And as I mentioned just now, FDI would also improve. But I think it's mistaken to make these comparisons, for instance, with the Singapore, especially with the Singapore dollar. I think we have a different sort of approach to the economy. We try to handle inflation by looking at subsidies, perhaps by controlling prices, etc. Singapore uses a very different approach. They use the Singapore dollar. So that could be, that would be one of the reasons why the ringgit, the Singapore dollar might turn out to be stronger than the ringgit. As for tagging it or trying to control the ringgit, not a great idea, I think, and I think the reason quite often why it's being suggested is because people are making this comparison with what happened in 1997, 98, and I think that that's a very mistaken, a very misleading kind of comparison to make, and we definitely nowhere in the kind of situation that we were in back then. So I think the kind of anxiety, fear is misleading. It's perhaps even mischievous to suggest anything of that sort. And I also think that number one, I don't think there's a need to do it, and I think the kind of policies that are being introduced, the attempt to make FDI Malaysia a more attractive place for FDI, those are the kinds of structural reforms that we do need to put in place. And finally, sort of a negative kind of argument would be that if you do introduce something like controls or try to peg the ringgit, that would send a very bad signal out to the markets. And I don't think it will be taken favorably. It might be a good stopgap measure, but I think it would do quite a bit to erode the confidence of foreign investors. So I think we would do well to stay away from that idea.
Thank you very much, Doctor, for that. Now, coming into this, another revenue source for the government would be taxes, which also could offset aids to the people, let alone subsidies. Now, your thoughts on whether we might see an increase in taxes We've already seen a 10% sales tax imposed on low-value goods of overseas items purchased online, which began in January.
That's right. I suppose that was one of several measures that have been and that will be introduced over the year. There was also the there's also the capital gains tax of 10% from the disposal of unlisted shares. Yes, the high value goods tax, which probably rolls in May. The service tax rate goes up from 6 to 8%, and also there's the expansion of taxable services, and there would be, I presume, some kind of reconfiguration of subsidy rationalization, which again would come in later in the year, perhaps closer to the second half of the year. So something that we have been talking about for a long time will finally come into place. We've been talking about targeted subsidies, and we've been saying that subsidies have been extended to the T20. They have been taking advantage of it quite unnecessarily. And I suppose steps will be taken to curb that, and PADU has been is being put in place in order to make targeted subsidies possible. So I think we have the whole package that's coming in, and I think that will strengthen tax revenue, government revenue. Also, we would be seeing e-invoicing. It probably affects a smaller band of firms, but it is, I think, yet another measure that's being taken to make sure that the tax collection system is more efficient. So I think we quite well geared up, or we're gearing up, I think, pretty well to address some of the gaps that we have noticed and have been talking a lot for quite a while. We finally getting serious about them.
Thank you very much, Doctor, for that. Now, with regards to the subsidies and taxes that we mentioned early on, oil prices have been stagnant for some time now, particularly around 95 at 2 ringgit 5 cent. Now, do you foresee a reduction in or increase of fuel subsidy is already costly at the price, I might add, as well?
To start with, I don't see the oil prices escalating. My guess is that the oil prices, unless there is something that's quite unexpected that happens, I expect oil prices to remain, Brent to remain very much where it is right now. True, you possibly might have some unexpected events. That there is, of course, the possibility of geopolitical risks coming out of the Middle East or related to Middle East. But I think if you looked at it in the wider context of particularly as in respect to the slowing of global demand, I think the more subdued global demand would probably be a factor in not escalating the prices of the price of oil. So I expect oil to be very much at where it stands, which, yes, of course, means that it would be costing the government some money in order to subsidize the price of oil. But as I mentioned just now, the policy measures with regard to targeted subsidies are likely to roll off, And I think that would be a good way to wean us off the subsidies that are being extended for petrol. And I think that would be a good way to move forward. It's also, the timing could probably also be good, fortuitous, because the price of oil is not, let's say, $100 per barrel. So I think the price at which it stands is a good price at which the government could slowly start to withdraw the subsidies, the oil subsidy.
We truly hope so. Well, anyway, thank you so much, Dr. Nambia. I'm afraid that's all the time that we've got on the program. Once again, thank you so much, Doctor, for being with us today. Now, we'd like to thank you as well, the viewers, for joining us and on the show, and hope you have a very good evening ahead. For now, it's back to you.